Stocks at their highest and the currency at its lowest in almost 2 years. There's a lot to celebrate for corporate Japan this Christmas. I'm Jamie McGeever and this is today's Market Pulse. More on that coming up, but we start with our chart of the day. Greece's stock market today hits a 2012 high. It's been a torrid year for the country and its financial markets, but investors looking to end 2012 on a high. A bit of context here though, shares are coming off their lowest level on record and have still lost around 80% in the 5 years of the crisis. Let's check in on some of the big individual movers today in Europe. Resource-related stocks gaining ground after Chinese industrial profit data reinforces signs of a steady economic recovery. Rio Tinto, BHP Billiton and Total shares all trading higher. Shares in Clariant surging after it says it's selling its textile, chemicals, paper, specialities and emulsions businesses to US-based investment firm SK Capital for $550 million. The big loser today? Nationalised Spanish lender Bankia. Shares down 13% on fears of further losses for shareholders after Spain's Bank Rescue Fund said the bank has a negative valuation of €4.2 billion. OK, let's get back to Japan and the yen. With me here in the studio is Reuters FX analyst Neil Kimberley. Neil, dollar yen at its highest in almost 2 years. It breached your 85 yen year-end target pretty easily. Is the next stop 90?
I think it is, Jamie. Yeah, I mean, went through 85 like a knife through butter. We have barrier options at 86 to figure, which will be protected initially, but above 86 there's a void, and I'm hearing a lot of stop entries for hedge funds adding to existing yen short positions as soon as we get through 86. I also think that Japan itself may start to be coming round to the idea that the yen is structurally going to weaken from here. So far this has been a gaijin trade and they've had a good old ride. Japan may be getting on board now.
Well, some people are clearly getting on board. Just take a look at the equity market. The Nikkei is up, 20% in the last 6 weeks, 22% year to date, and Toyota shares up more than 50% so far this year.
You've hit the nail on the head there, Jamie. Japanese exporter shares going through the roof as people start to believe that the yen can weaken further, and obviously that has benefits for the Japanese. In terms of behaviour by the Japanese exporters, budget rates for this semester around 80. We're knocking on 86 this morning in Tokyo. If you're a Japanese exporter, you can sit back and enjoy the ride. Leave a few call levels if you want to, maybe even a trailing stop on the downside to sell some dollars if it turns around. But basically, you've had years, maybe decades of struggling with a rising yen. You want to ride this baby, let dollar yen go up, and you're not going to stand in the way of it. And that is very interesting.
One yen move and dollar yen up is equivalent to around 35 billion yen extra profit for Toyota. So,
it's massive. And when you look at the Nikkei in its generality, think about the behaviour of possibly the Japanese life insurers. They are massively long of Japanese equities. The Nikkei's been down. When the Nikkei's down, their risk appetite is smaller. If they do go offshore, they tend to hedge the currency. Now, with the Nikkei back up well above 10,000 this morning, those guys must be feeling the love. They may be tempted to go offshore again in 2013. Will they put the same amount of hedges on? Possibly not. Risk appetite comes back. They have to buy the dollars to go offshore. They may not sell so many dollars to hedge the currency risk. It's yen negative again. We haven't seen that. We may be on the cusp of Japanese life insurers buying into the weak yen.
What's good for Japan, though, isn't necessarily good for its neighbours in Asia, particularly China.
No, I agree with you, but I don't think Mr. Abe is going to be losing any sleep over this. He's been elected on taking a more assertive role towards the Chinese, particularly over those disputed Senkaku Diaoyu Islands. He has already said that the strong yen has hollowed out Japanese industry. He will see the weaker yen as a way of reshoring, if you will, bringing jobs back to Japan. Now, I appreciate that China, Korea, Taiwan, other countries in the area won't like this, but I'm not sure there's much they can do about it. And also, Jamie, I come back to this idea that the Americans may want to see a weaker yen. They want to see a strong Japan as a counterweight to China. And cast your mind back to that IMF meeting in Tokyo in November, when there was talk that on the fringes, the American treasuries were saying privately they could live with dollar yen up to 90. If it's good for the UST, it's good enough for me.
OK, Neil, thank you very much. Well, finally, I'll leave you with an alternative investment with a difference. Wealthy Chinese are going nuts for walnuts. Rotating them in the palm of your hand is supposed to stimulate blood circulation, and that's prompting the nation's uber-rich to shell out tens of thousands of dollars for the right pair. The larger, the rarer, and the closer to identical, the bigger the price. As Beijing put the brakes on the property sector in 2010, rich Chinese have been searching for new places to park their money. Walnut prices have soared in the last 5 years, but experts say overplanting may mean cracks are starting to appear in the market. That was today's Market Pulse. Do check out our other shows on demand today, including the CIO of Pioneer Investments on where to park your money in 2013. I'm Jamie McGeever. This is Reuters.